Hey, what's up guys? So welcome back to our channel Financial Wealth. If you are watching our video first time, please consider subscribing our channel. Now our today's video is about how you can select a financial advisor. Now our last video we have gone through that whether do you need a financial advisor or not. So I'm sure you must have some idea that whether you require a financial advisor or not. And in this video, I'm going to talk about how you can select the right financial advisor. Now, I'm actually reading one of the book. This is a book from Tony Robbins. This is Money Master the Game, and this is one of my favorite book. I always kind of read all the different topics into, and this book has pretty good explanation and into the area like how you can select the right financial advisor company and how you can find the right financial advisor for you and for your asset. So literally, I'm going to read some of these good topic actually from this book. Now, this is very important that before you decide and before you select your financial advisor, you need to make sure a certain criteria. You need to make sure certain point before you select the financial advisor. So let me give you some ideas from this book. This is a book actually from Tony Robbins and called Seven Step for Money Master the Game, and is the seven simple step to financial freedom. It's a pretty good book. In case you don't have, you can buy it. But I always like to read this book actually. So here is the explanation by Tony Robbins. Actually, he did interview so many financial investors and hedge fund managers, and he also interviewed Warren Buffett, right, and many other billionaires he interviewed, and that's how he collected all these good info for us. So I think it is kind of worth reading into it. So here is the detail from this book. So before you select your financial advisor, there are certain steps they would like to make sure, right? And I'm reading for you here. So here it is. Aside from making sure that the firms and individual is registered with the state or SEC as a registered investment advisor, the most important criteria is to make sure that the person firms is not affiliated with a broker dealer, and you can ask them to have that part in writing before you select them as your financial advisor. Now you also need to make sure that advisor does not offer any proprietary funds. Some firms create their own product and a fund and then put those product into your investment portfolio. In other words, you may find yourself paying a firm to advise you to buy their own product, right? And believe it or not, this can be done in the fiduciary world. So basically it is possible, right? They kind of create their own product and they can basically sell you their own product, and now you are also paying investment fees on that. So I think it is a not right way to do, but seems like there is a financial advising companies and people they're doing that. So you need to make sure that part. Other thing, make sure the registered investment advisor is compensated on a percentage of your asset under management, not for buying mutual funds. It typically never makes sense to pay more than 1.25% in annual advisory fees. For comprehensive financial planning and preferably even less than 1%, right? If you are paying only for portfolio management. So this is very important step. You need to understand, right? If somebody is just managing your portfolio, right, then you don't really need to pay very high fee. Your fee should be less than even 1%, right? And there is another thing that your fee should not be more than 1.25%. So remember that. So another important topic here, right, from this book, they're saying make sure the registered investment advisor does not receive a compensation for trading stock or a bond. Now, you probably does not know this, but if your financial advisor, let's say if they're suggesting some stock, and there are some companies on a stock, right, they can give them direct commission in order to trade their fund, right? So we need to make sure before we select our financial advisor, right, that they are not getting or they are not compensating directly from the trading stocks or bond. If you are a bond investor, the most flagrant foul in this industry are the markup charged by the broker and the firms. If you are a trading bond with the broker, this is where you are more than likely putting their kids through private school with the markup they are ranking him. With the markup they are ranking in. So what this mean is, so there are some bond market, right, and they do have some markup. So when they buy a bond for you, right, when they buy some certain stock for you, they have a certain markup and fees, right? They can apply directly on it, and it is basically directly on you. So you need to make sure that registered investment advisory they does not receive compensation directly from these trading stocks and a bond. Another thing is, with an advisor, you don't want to just give them your money directly. You want to make sure that your money is held with reputable third party custodian, so such as Charles Schwab, right, TD America, TD Ameritrade, or Fidelity, or Merrill Lynch, which is offered 24/7 online account access and send the monthly statement directly to you. So you need to make sure that your fund is actually managed by some of these reputed company. You do not want to give your financials and asset to someone just who probably holding a pretty small firm. But this is just to be on a safe side, right? That's what the book is advising for. Another thing, work with the firm that takes their professional seriously, right? You need to make sure whoever managing and handling your financials and your financial advisor, they must be very professional. There are some certifications actually before you select your financial advisor. You need to make sure that they should have those certain certifications before you give them your portfolio, right? And when you go to a doctor, right, they're explaining pretty nice way over here, right, in the book, and says when you go to a doctor, you want to be sure that they have an MD credential to back it up, right? And in the same in the financial industry, when looking for an advisory firm, be sure that the firm has the educated and credential advisors on board. So you need to make sure that they do have all the individual has a certain financial certifications. The certified financial planner design designation is the CPAs and attorney are all good qualification to have your financial team, right? So these are some of the good point which you need to basically look for. Now another thing, you also need to look for that how bigger your portfolio is, right? If you are in 100,000, if you are in a 200,000, right? If you have a 500,000 or $1 million to manage, right? You need to look into that area is very important. Let's say if you have a very small portfolio, right? $25,000 or $50,000, right? You need to kind of examine this thing carefully, whether do you really need the financial advisor, right? So as bigger your portfolio is, right, as bigger your asset is, you need to see whether you can able to manage by yourself or you need a financial advisor company from outside. I would suggest, let's say if you are very busy in your work routine, and if you do not have time at all, and let's say your portfolio is bigger than like 250,000, 300,000, or $1 million, $2 million, I suggest that you better look into this option for the financial advisor. So that's it in this video. I hope you enjoy all this information, and make sure to subscribe our channel Financial Wealth on the YouTube, and do not forget to hit the like button. I will see you and come back with the some other financial useful information for you in the next video. See you till then. Thank you. Bye.